Good evening. This is Duane Lowry for the DPP Gearing Desk on Sunday, February 10th. It's currently about 3:35 in the afternoon. Calls tonight are going to be, I suppose, somewhat legitimately mixed, but I think mostly leaning towards the lower side. South American weather really doesn't appear to be offer that much for significant concerns, especially in light of how the market reacted Friday. The USDA basically indicating that previous market concerns about production losses in South America have been overrated, exaggerated. When you look at an overall production potential situation, which is largely what we've been saying here for the last several weeks. Market coming into the last week was set up for some sort of technical break. We get the USDA reports, which do not offer much for bullish new storylines. That creates a tremendous amount of disappointment. The corn market had been underperforming anyway, experienced liquidation pressures, as was the wheat market, and then next thing you know, you got beans participating as well. With that type of a backdrop, I don't think there's anything about the South American weather in this afternoon's forecast that's going to get anybody very excited. The bean market suffered large losses on Friday. I think there's probably more liquidation pressures that should be expected this week because of that. That being said, you got March beans settled at 14.52. There's going to be layers of longer-term support and buying interest beginning to develop. 10 or 15 cents below where we closed on Friday. To get the market below 14.20, which would be 30-some cents down from where we finished Friday, that's probably not very likely, and if we do, we're probably not going to be able to build any momentum to the downside from those levels. So I think you're looking at 10 to 15 cents of downside potential here this week on liquidation pressures, maybe a little bit more than that. The big question here is, are we dealing with the market that is going to experience a liquidation period and then rebound and recover and challenge recent highs, or are we dealing with a market that's completely all over and done with, and we begin some sort of a trending lower pattern that lasts for multiple weeks or a few months? I don't think it's the latter. I think there's a better chance that you've got a situation where you're going to go through liquidation pressures and punish people that bought it late, got emotional with trying to buy it last week or the week before on weather, and then once we're done with that liquidation process, I think you'll see the market stabilize, led by old crop, led by nearby months. Spreads should remain relatively firm, and then I think you begin to recover again. South American harvest is becoming more confident, more secure. We might lose a little bit based on weather, but overall it's still going to be a good crop, plentiful supplies, and that's not a real big issue, I don't think. The logistical problems, trying to get a lot of demand satisfied from South American ports, that could be a problem. That would tend to firm spreads when there's a concern. You've got port strike probabilities are increasing here in the weeks ahead. So I think there's a good chance that there's still an old crop tight story situation. U.S. stocks are going to be very tight, and I think that there's a good chance that even though we experienced a sharp break Friday, even though we're probably going to experience some follow-through activity on the downside this week, I think after a week or so to absorb that, I think the market will try to stabilize. We'll make another run at the highs we made here during the last week or two, probably make a higher high than that, and then we can worry about longer-term, more bearish outlooks associated with new crop, etc. But I think there's still another round of support that'll be dominated and led by tight stocks in the U.S., logistical problems in South America, and be led by the front-end months. So I think we'll be supported, but we probably do have some short-term weakness here to experience this week in the beans. As far as wheat is concerned, I don't think there's much here for news. I don't think there was much from USDA on Friday of any real significance. The wheat market's been experiencing a liquidation break. We were concerned about a full test of the recent lows, or the January lows. That pretty much is what has happened. Could we have some additional follow-through this week? Absolutely. I think that's definitely the case. I'm not sure whether the long-term fundamentals in wheat is all that constructive. To the extent that it is constructive, you're not going to have a significant amount of rally potential, and you might end up being able to build a case for quite a bit lower wheat prices, but I think the factors that would allow for you to get quite a bit lower on wheat values is going to have to wait till we get more into the past the spring row crop planting period, probably get into the early summer and see what we're dealing with at that time. In the meantime, you still have a U.S. hard red winter wheat crop that is in very poor condition going into dormancy. They need moisture. They'll probably get some improvement of moisture, but you're still going to have a concern about that crop. And I think the odds are U.S. carry-out ideas from here forward are more likely to shrink than they are to increase. And I think that while the market can experience some additional liquidation pressures, technical selling, this week's selling energy is probably going to be about the most you're going to get for a while, and whatever we can get for additional downside, I think that's going to be about it. Could we still go down and take out the January lows? I think it's possible. We're about 20 cents away on Friday's close, but I think it's becoming less and less likely. If they were going to do that, I think they would have probably gotten closer to those levels here this last week. So I think if you see wheat market grind around, trade lower, maybe 5-10 cents lower in the wheat, it's probably not an area you want to be short anymore. It's probably an area where certain people are going to be looking to try to bottom pick the wheat. Problem is, I'm not sure if it's right to own wheat, say from now through the next 60 days, looking for some sort of rally. If it's right to own wheat, it's probably more right to own something else, whether that's beans or old crop corn. I'm not sure, but I'm not sure wheat is the preferred ownership here. But expect some weakness there this week to begin with, but not to get carried away, and we're not going to start a new downtrend here. As far as corn is concerned, we're basically involved in a liquidation process. We're like 5 or 6 days into it. It did not start with Friday's price action. We've taken out chart points that have triggered sell stops. All those obvious chart points, those have been triggered. Long-term support in March corn is going to build on anything under $7. You're at $7.09 with Friday's settlement. Could you go to $6.90 or $6.95? Yes, it's possible. Is it a given that you're going to get under 7? No, it's not. So if you're looking to have a need to have old crop ownership in corn, any weakness this week, I think you're looking to try to trade from the long side. I think that it's a situation where the corn fundamental strength is still going to be centered on old crop, but even new crop values, these 13s settle at 563. There's going to be lots of support around 550, and I think for this time frame of the year with all the unknowns ahead of us, 550 D's futures for D's 13 new crop futures, that's going to be the bottom side of parameters here for probably the next few months. So I wouldn't want to be pressing this short there. There is certainly a bearish longer-term scenario that's worthy of consideration that may very well lead to prices substantially lower than where they are right now. But I think that there's still time to believe there's going to be better selling opportunities ahead, even for new crop. I still think there's a chance you're going to get a chance to sell these 13 futures at $6 or above. I think it's going to be a wise move to be looking aggressively to make those sales on that type of a rally. But I think there's still hope for that to happen. There's still plenty of time for old crop corn to influence the trade and be a supportive feature. And I think there's a strong argument fundamentally being made that we still need to ration corn supplies, and we're not going to do that in some sort of a declining price structure from where we're at right now. So what you saw last week, that this is a temporary liquidation period. Maybe it carries into this week, but there's some opportunities here to look on the long side of the corn, I think, this week. All your focus should mostly be towards the old crop. I think that's where the storyline comes. But even new crop is getting too cheap. For the DPP Grain Desk, this has been Duane Lowry. Thank you.